Alibaba just reported earnings this morning and the stock is down almost 6%. Is this an overreaction from investors or Alibaba earnings were really bad that justified this stock move? Whether you are an Alibaba investor or if you are looking into buying this company, this is the video for you. Let's take a deep dive into Alibaba earnings. First, Alibaba shares are down 5% after revenue miss, and they just announced that they add 25 billion to boost their buyback plan. Um, just the highlights, they missed their revenue target or expectation from this quarter, but it was just for 1 or 1.5%, which is nothing basically. So they were basically in line, but news are saying this is a miss, and it is. Uh, the shares were up pre-market when they announced the share buyback, but as investors were looking to the presentation, they were getting bearish, and at the moment, the stock is down almost 6%. Looking to the results, they just missed their revenue. It was expected them to have for this latest quarter 262 billion yuan, and they just reported 260.35 billion, which is 1.5% around that, a miss. Or even less, maybe less than 1%. Yes, it's less than 1%, which is nothing. But something bad I've just read the report, and one thing they announced and why investors are so bearish, in my opinion, it's because their Tmall and Tmall business and cloud were not an highlight in this quarter. They basically had no growth, but let's start looking to this earnings report. First, words from the CEO, Eddie Wu. We deliver a solid quarter and we are executing our focused strategy across the organization. Our top priority is to reignite the growth of our core business, e-commerce and cloud computing. We will step up investment to improve users. This is basically what he have said last quarter. They want to use their cash to invest in their main business, the e-commerce, and then they want to invest in the cloud computing and in other segments as well. But this is their main focus. So they are admitting that it was not a bad quarter. It was not a bad quarter. They just grew revenues around 5% year on year, but this has been a really good year for Alibaba. So it's basically a small miss or almost in line. I didn't understand why the stock is down so much. Maybe it's an overreaction, we don't know, but this is just my opinion. Words from the Chief Financial Officer, Toby Chu. Alibaba delivered a healthy quarter with revenue growth 5% year over year. We increase our investment in strategic priorities and improve shareholder return by leveraging our strong balance sheet and cash flow. This is really good, and it was something I was expecting. And saying them increasing their buyback program, it makes a lot of sense because Alibaba shares are so cheap. They have a ratio of price to free cash flow around 8. They basically had around $24 billion in free cash flow this year, which is a ratio of 8 in price to free cash flow, around that 7 8, which is an earnings yield above 10%, which is really good. And seeing them using that money to increase shareholder value, it's really good. So I'm really happy. They approved an increase of 25 billion on our share repurchase. It makes a lot of sense. This is good management doing what they should do. Bear in mind, everyone always thinks buybacks are good, but buybacks are really good when shares of the company are really undervalued. So this is a way to increase shareholder value, and this is one of the best way because it's really tax efficient. Our consistent share purchase has also reduced outstanding shares count while achieving EPS and cash flow per action accretion. This is really important, guys. So we have seen earnings yield improving or companies that have earnings growth, but earnings per share or cash flow per share accretion, it's what we have to be looking for in a company, because there are companies that are increasing their earnings but they are diluting the shareholders, growing companies that do that, and that doesn't create shareholder value. A cash flow per share or earnings per share increasing, that's what creates shareholder value. And this is the most important metric to look for in a company. And Alibaba has a really good opportunity to be growing in this way. So revenue is growing. This is basically it. I do really like to look into their presentation. First, let's look into their segments. Taobao and Tmall, which is the biggest segment on Alibaba, just grew 2% in this quarter when you compare year on year, this latest quarter. Cloud have just grew 3%, but Alibaba International Digital Commerce was really good. They grow 44%. Cainiao has turned positive and it grew 24%. Local service, digital media, a really good growth, but Taobao, Tmall Group, and Cloud segment was a disappointment. That's why the stock is down a lot. Cloud has been having difficulties, but there are a lot of good prospects in AI. I do really believe, at least it's what management has said, that they are leading the market on China. They are the biggest cloud provider in China, and when it turns to AI, they are leading this market. At least that is what news are saying, and it will be really good in the future. At the moment, we are not seeing earnings growth or revenue growth from that segment, but I do believe in the next few months, in the next quarter, we might see a really increase or a really good growth in the cloud intelligence group for Alibaba. So it might be a really good thing for Alibaba. Taobao and Tmall were really good in the last quarter, but this quarter was a little bit of a disappointment, but still growing. It might be a quarter that Chinese economy didn't grow as expected, and Taobao and Tmall will go with that, which is normal. But overall, it was a really strong and healthy quarter for Alibaba. It was not like they missed everything or they didn't grow at all. But if this is a really bad quarter for Alibaba and they grew 5%, I will take that. So this is really good. Basically, this year to date, they had $24 billion in cash, in free cash flow, and their market cap is around 170 billion, which is a valuation. They look like really undervalued. Or look at the free cash flow. The 3 months, this is in yuan, they just did $8 billion in free cash flow this last quarter. If you multiply that by 4, it is $32 billion. So this turns out to be like a price to free cash flow of 6 if you multiply this free cash flow of this latest quarter. The net cash position is 69 billion dollars when they have a market cap of $170. If you take the market cap, if you take the net cash position from the market cap, it will have you are buying this company for $100 billion, and this is a company that is doing around $30 billion. They could do $13 billion in a year. So it is like a price to free cash flow of 3. It is an earnings yield above 30% if you look that way, which is you can't find a company like Alibaba anywhere else. When you look into valuation, this is my view on Alibaba. So I dare you to find a company like Alibaba. Then you have the highlights from the different segments in this presentation. This is a really good presentation. Then capital management, upsize on share repurchase program. They just announced this latest quarter they bought $292 billion, total of $2.9 billion in shares, which is not bad. They said that net reduction of shares outstanding was 3.3% in the latest quarter. No, it's not in the latest quarter, but in the latest year, in 2023. It is not bad, but I do really believe they could have done better. I would like to see them to buy back like 10% of their shares outstanding. it will be really good for the shareholders, but I do understand why they don't do that. But as a shareholder, I would love to see that. They approved an increase of $25 billion in their share repurchase program until March of 2027. This is what I've talked to you guys. This was my expectation. I would like to see in this quarter them to announce an increase in their shares buyback program, because they only had like $10 billion left, and at this price and with the balance sheet that Alibaba has, it will make a lot of sense for them to buying back shares, even more than doing a dividend like they have done in the last quarter. And this is really good news. This is the highlight for me, the biggest thing I've seen in this report, and I'm really happy with that. Looking to their revenues and earnings were really solid. They are making a lot of money, and valuation makes a lot of sense. Doesn't have to say that to you, because if you are seeing this video, you are looking to Alibaba, and that's because of the valuation of this company. This is a really good company, but the revenue, it was a miss, only 5%. But bear in mind, last quarter was a really good quarter, a double-digit growth, and for the last year, it was a really solid year for Alibaba. I'm really happy, and for me, Alibaba stock being down 5.6%, this is an overreaction. I will take this opportunity. This is a really great company. When I look to Alibaba, my fair value or the price I want to buy this company, it's under $130. It will not change because of this result, but the quality of this company is still intact. Really good company, doing a share repurchase program. It will be really good in the future. In the next 5 years, it will increase like Apple did in the last few years, when they have done a lot of buybacks, and it have a really positive impact on the earnings per share of this company. And I do believe with Alibaba continue to grow, these buybacks will increase the growth of earnings per share or free cash flow per share of Alibaba, and it will be really good for the future, because buying back this company at this valuation, it makes a lot of sense. So guys, this is my opinion of this latest earnings report. Good things, bad things, but this is my opinion about these earnings. Might be an overreaction, but this might be a good opportunity for Alibaba investors, or for investors that are looking to buy this company. So I hope you find this video useful, guys, and if you like it, please subscribe. See you next time.